If you're like 99% of the people in crypto out there, you grab a dart, throw it to a dartboard and call it research completed. Today, I'll show you how to make realistic price predictions for cryptocurrencies based on the cold hard facts of supply, volume and market trends. Forget the hype, this is about understanding the data and making informed decisions. Stick around if you want to learn how to stop being a broke pleb and start predicting like a pro. Also, if you want to be eligible for a Tangent hardware wallet, be sure to comment the timestamp at which you see a pack of Wrigley spearmint gums. Predicting price movements is akin to navigating a stormy sea. The hype, emotions and market narratives often drown out rational analysis, leaving many investors making decisions based on hope rather than evidence. But what if you could cut through the noise? What if you had a framework for making realistic price predictions grounded in data rather than speculation? In this video, we'll walk you through how to analyze and forecast crypto prices for 2024 and 2025 with a focus on price action, supply and volume, three of the most critical factors in any market. The cryptocurrency market operates at the intersection of technology, finance and human behavior. Now, unlike traditional assets, cryptocurrencies are largely unregulated, making their prices highly sensitive to speculation, adoption trends, and macroeconomic factors. However, no matter how chaotic the market seems, the fundamentals remain consistent. Supply, demand, and market sentiment drive prices. In analyzing crypto price predictions, you need to start with the basics, so circulating supply, total supply, and tokenomics. Cryptocurrencies with fixed supplies, like Bitcoin, tend to behave differently than those with inflationary models. For example, Bitcoin's halving events create predictable supply shocks, often leading to price rallies. Similarly, understanding a token's utility, whether it's used for staking, governance or transactions, can offer insights into its demand potential. Now, some tools you can use for this are TradingView, Glassnode, CoinMarketCap or CoinGecko, Masari AI, June Analytics and Sentiment. Now, each providing other tools to help you gather intel. By combining these tools, you can create a comprehensive picture of a cryptocurrency's health and its potential price trajectory. Now, in this video, I won't pull all of them up and showcase them because I'm going to make it much more simpler for you. So let's look at the basics here. Price action is the heartbeat of any market. It reveals how buyers and sellers interact over time and offers clues about market psychology. Start by pulling up a chart of a token or coin if you want to analyze. Look at the macro trends. Is the asset in a bull market, a bear market or a consolidation phase? However, price action alone doesn't tell the full story. Combine it with volume data. Volume confirms the strength of a price movement. A breakout with high volume is far more reliable than one with low volume. Use platforms like TradingView to overlay volume indicators on your price charts. Supply is a crucial but often overlooked factor. Cryptocurrencies with limited supplies have a natural scarcity that drives demand over time. But it's not just about scarcity, it's also about how the supply is distributed. Are large amounts held by whales or locked in smart contracts? Glassnode is particularly useful here, providing insights into wallet balances and on-chain activity. For example, if a significant portion of a token's circulating supply is held by a few wallets, the market could be vulnerable to sudden dumps. Conversely, a widely distributed supply suggests a healthier ecosystem. You can also check a site like bubblemaps.io for that to see the token distribution. That will give you good insights in how bad a price can be manipulated. Volume tells you how much interest an asset is generating in the market. High trading volume often precedes major price moves, as it indicates strong participation from buyers and sellers. But volume without liquidity can be misleading. Now, liquidity measures how easily an asset can be bought or sold without affecting its price. An asset with high volume but low liquidity is prone to sharp price swings, making it riskier to trade. To analyze volume and liquidity, tools like CoinMarketCap and CoinGecko are invaluable. These platforms show trading volume across exchanges and the depths of order books, giving you a sense of how liquid the market is. And before we go to the case studies, I have to make sure you realize that I'm not a registered financial advisor. My videos are for educational and entertainment purposes only. Always do your own research and only invest money that you're willing to lose, because even though you can gain a lot in crypto, you'll most likely lose it all. Now, if you do gain a lot, you have to get yourself a hardware wallet, and my personal choice is Tangent, and I can offer you an exclusive discount with my link down below. And then if you know people that are new to crypto, maybe you can offer them a cryptocurrency course as well.
Welcome to Crypto with Rico presents the Ultimate Crypto Course, a course designed to take you from crypto curious to crypto confident. Whether you're just beginning to dip your toes into the world of Bitcoin or looking to dive deep into decentralized finance, NFTs in the metaverse, you've come to the right place. Here, you'll get the knowledge you need to understand how cryptocurrency works, how to secure your assets, and most importantly, how to build a solid portfolio that positions you for long-term success in this rapidly evolving space. Get the course now while you still can by clicking the link in the description, and let's get cracking.
Now let's do a case study of a couple of tokens, and I will give you a realistic outcome based on the data at hand. I will also tell you how to increase your chances of making it. Alright, so for the case study, we're going to look at Cardano, Fidium, Samoyed, and Miria, right? We're going to start with Cardano, and I'm telling you, no other YouTube is talking about the things I'm going to tell you right now, right? So subscribe for that, because I'm bringing you the alpha. If you look at Cardano, let's click at Max. I'm using CoinGecko, because I want to see what the previous all-time high was. It was around $2.86, right? With a volume, yeah, this is very important, of 3.8 billion. So I grabbed myself a calculator, and the previous price was this, and the current price is 74 cents, right? So that's a 3.8x that we need to do price-wise to be able to reach the previous all-time high, right? Now let's look at the volume right now, 6.2 billion, okay? So volume up here, what was it? Like 3.6 billion. So we already have double the volume, but we're not even close to the all-time high, right? So if we do the 6.2 billion times this, yeah, that means we need 23.9 billion in volume to be able to go back to the previous all-time high. And we also need to realize that the circulating supply isn't the same as the total supply. So that means tokens are still being minted. So that means from this fact, there is still some price pressure or some selling pressure or whatever you want to call it, right? So if you take that into account, how high is the chance, let us know down below, that this project will ever reach its previous all-time high? Knowing that there are many more tokens right now, the focus is on meme tokens as well. We have a war going on, we've had inflation, money is becoming worth less. We've got people that can't even pay their normal bills, so don't even mention having them to invest in crypto, because everybody's talking about, oh, retail needs to come, retail still isn't there, you know, we only got the institution, wait till retail gets here. Retail is trying to not drown in the bills that they receive at their doorstep, okay? So I don't think there's any money with them to invest, okay? Let's move on to the next one. Fidium, another project I'm invested in. I'm invested in all four of them, by the way. This is project circulating supply, matches the total supply. That's great. If we look at the max, so the previous one, that was 2 cents. Right now it's 0.004 cents. But the volume right now is 713,000. And the volume back then was 1.7 million, right? Now we need to do a couple of X's, around 5, I think, to get the same price. So that means 3.5 million, okay? And if we reach 3.5 million in volume, we will probably see a previous all-time high. Now know that this is a rebranded token. It was Blockbank before, now it's Fidium. But wonder to yourself, how big is the chance that we're going to increase the volume by that much, right? So don't just stare yourself blindly at, oh, we're going back to the previous all-time high. No, we might not. So my personal strategy with this is I'm already in profits, but I'm just going to take out bits and bits and bits, get my initial out, and then I'll just wait and see what happens. If you got in later, because my biggest advancement here is that I bought all the way down, which I did with many other tokens. So during the bear market, I kept DCAing down. So that's a great benefit of DCAing, which means that you bring down your average entry, which means that you'll be in profit much more easily. And then I'll just see what I'm going to do, right? Samoyed, another great example. Circulating supply, 4.2 billion, which means that there's still sell pressure going on, which means that even though the demand increases, the price might not even increase because we don't have all the tokens into circulation right now. Previous all-time high, which was 22 cents. Right now we're at 1.4 cent. The volume back then was 62.9 million. Volume right now, 4.8 million. We need to do like a 15x, which means that we need like 75 million in volume to be able to get to the previous all-time high, provided that these stay the same, right? But they don't stay the same. This goes up, so that means there's still sell pressure. So how big is the chance that we're going back to the previous all-time high? I think it's very low, because not only due to this fact, but also because Like I said, many more tokens are being minted or created. Then we've got the meme tokens where everybody has their focus on, but they don't focus on the first few ones being created on Solana. No, they focus on the newer ones being created on Solana. So that's where all the liquidity is going to, which means that if the liquidity is going there, it's not going here, which means that we stay at the same price level, right? Now this already pumped like 100% since a year. It did like 86% in the past 2 weeks. But we're far, far away from the previous all-time high, right? So my strategy with this is, as soon as I break even, I'm out. I'm not gonna bother with this token anymore. Miriam, another great project in my opinion. Right now, circulating supply is half the total supply. There's a lot of tokens coming out because people bought nodes, they get rewards, those rewards can be claimed. And then once they are claimed, they can be sold. So there's a lot of sell pressure there. They got delisted on, I think it was OKX. So that dropped the price down as well this week. Right now the price is 0.0019 with a volume of 2.6 million. The previous all-time high was 1.4 cents with a 15.6 million in volume. Now just do the math, you know, and realize that how much more volume we need to get back to the previous all-time high. So like I said, no other YouTuber is talking about this, okay? And everybody should, because it's something people need to realize. In order for a project to grow price-wise, you know, there needs to be a demand, there needs to be volume. And if all those things aren't there, or one like decreases the other, you know, we're at a standstill and nothing will happen. So take that into consideration. That's why I'm personally not waiting for previous all-time highs to be reached. I'm looking at other indicators. So am I break even in the project? Do I still want to hold that project? What's the future projection of that project? You know, maybe I'll just take out my initial and then leave a moon back and see what happens, and then focus on my initial investment and then use it someplace else, you know. Obviously that's up to you because I'm not a registered financial advisor, so create your own plan with that. But I know for a fact I'm not gonna wait for previous all-time highs with many projects, because that will never happen in my opinion. Okay, mark my words, write it down, take a screenshot, whatever. But I don't think that's gonna happen, right? So let's move on to the next part of this video. No cryptocurrency exists in a vacuum. The broader economic landscape, regulatory developments and technological innovations all influence the market. In 2024 and 2025, key trends like central bank policies, the rollout of central bank digital currencies and advancements in blockchain technology will play a significant role. Pay attention to sentiment indicators from platforms like Sentiment. Are social media conversations bullish or bearish? Are institutional investors entering or exiting the market? These factors, though qualitative, add another layer of insight to your analysis. You can also create a dashboard on Arkham Intelligence, then put in your most favorite wallets to see what they do, so for instance the ETF funds, and then make your choices depending on that. Crypto price predictions are not about crystal balls or wild guesses. They're about understanding the data, recognizing patterns, and applying a disciplined approach to analysis. By combining price action, supply dynamics, and volume with macroeconomic trends and sentiment analysis, you can create forecasts that are not only realistic, but actionable as well. So the next time someone asks you for your take on where Bitcoin and Ethereum might be headed, you'll have more than just an opinion. You'll have a framework backed by data and tools. And in a market driven by emotion, that's a superpower worth having. That's it for now, and I'll see you guys next time. Doei!